Hey there traders, this is Steve Mighty, the market chartist for FX Explained, and here with one of our regular weekly MacroWatch updates for the week commencing the 8th of February 2021. Normality returns with Reddit frenzy reversed, stocks surge. So let's take a look first of all at the macroeconomic and geopolitical developments in here over the past week. Well, first of all, the whole GameStop frenzy has run out of steam over the past week, and we're seeing many of these stocks reverse course. GameStop, BlackBerry, AMC, and the price of silver all moving back lower, having had their surging moves at the very end of January. And in turn, this has allowed then the broader stock markets that sold off on the back of that frenzy to rebound. So we saw the sell-off at the very end of January and a strong rebound into the beginning of February, and we'll take a look at that a little bit more later as we go through the impacts on all the global financial markets. Earnings reports continuing to come out well, and we're way into the earnings season now, and Google and Amazon post firm numbers in here over the last week, with Jeff Bezos announcing he's stepping down at Amazon from his CEO role going forward, but nevertheless Google and Amazon posting strong returns and really kind of not finishing off earnings season yet, but showing a really strong earnings season over the past few weeks as we move past the midway point of the reporting season. Also in here, the Democrats managed to progress President Biden's COVID relief bill. Again, a positive for the markets, a positive for risk assets in here. And we're seeing riskier assets pushing higher on the back of this. And also the Bank of England stepped further away from a negative interest rate policy on Thursday, highlighting an expectation of a strong rebound in the UK economy. So across the board in here, we're getting positive news for global riskier assets, highlighting the recovery prospects for the global economy and national economies as we move into 2021. And finally, the market shrugged off a slightly disappointing US employment report on Friday in here, and holding on to a positive tone despite the data not quite as good as we were anticipating. Europe has secured more vaccines from AstraZeneca, seen again as a positive, and the number of new cases and hospitalizations and deaths in Europe starting to roll over in places as lockdown measures are having an impact. So let's take a look at the global financial market developments in here of the week ending the 5th of February 2021. Well, as we looked at there, stocks dipping in late January, surging in early February in here, with the S&P 500, Nasdaq 100 making new all-time highs at the end of last week. The US dollar index and the US dollar broadly stays strong, although the US dollar index did dip low. The dollar broadly dipped lower on Friday after that US employment report, but the rebound that we've seen in here for 2021 continued last week despite the dip lower on Friday. And the pound has stayed strong on the back of the Bank of England announcement there, sold off ahead of the Bank of England and then rebound strongly in here. Not just against the dollar, which itself is staying strong, but we've also seen the pound continue to gain versus the euro in here. EUR GBP going lower, highlighting pound rebound and pound strength. In the commodity markets, oil broke out to the upside in here over the last week, both from OPEC plus cuts, plus the reflation trade kicking in again in here. So both the supply and demand side in here helping oil break higher to multi-month highs. And also the reflation trade seeing copper bounce in here, having been in a negative consolidation more recently. Still staying in that consolidation theme evident from late December through January, but nevertheless now more in a positive consolidation tone with the rebound that we saw at the end of last week. And finally, we take a look at gold in here, which plunged lower through last week, and despite a slight rebound Friday, US dollar strength in here equating to gold weakness. So gold breaking down below the January low and now aiming towards that low posted in late November. So the gold price remaining vulnerable. We're now going to take a look at the week ahead, the week commencing the 8th of February. And the Trump impeachment trial starts this week, but we do not expect it to have a significant impact on financial markets. We will, however, be monitoring the progress of the Democrats' COVID relief bill, and that's going to be very much in the spotlight. And if that goes through, as it is expected to go through at the moment, not in its entirety, but if it's a strong COVID relief bill in here, probably going to continue the risk on theme for global assets as we go through into the early to mid part of this month. And then we're also going to monitor for possible easing of lockdown announcements in Europe. Announcements potentially coming for future easing of lockdowns, given the success so far of the current lockdowns, particularly throughout Europe in here, that they've had on falling COVID-19 cases. And we're going to be monitoring those COVID-19 cases, hospitalizations and deaths as the vaccine continues to be rolled out, and also watching for further vaccine announcements in here, even new vaccines coming to the stage, or the actual rollout and the implementation of the vaccines in here, how that is going globally, but also with a particular focus on Europe, who are currently behind really the curve of where they want to be. On the central bank, for once in here, not for a long time have we seen this central bank watch, no real significant activity of note from the central bank side over the next week. And even the data side, we're very light in here. German industrial production Monday, Chinese trade data Tuesday, a host of CPI from China, Germany and the US on Wednesday, those weekly US jobless claims Thursday, and then we get UK GDP, manufacturing, industrial production on Friday. So it's a fairly light calendar week on the macroeconomic side, and even the microeconomic side, the earnings data in here now not really to the fore. So I'm going to wish you all a great trading week. Please do stay safe out there, and I'll be back with you soon for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.